Hello everyone, this is the pre-market report video for today April 5th in the Indian stock market in terms of Nifty and Bank Nifty. Day before yesterday, our Indian market closed positive for the third straight session. Nifty opened 90 points gap up and had a really very volatile day. For example, from the opening it dropped around 110 points till 11:30 am. And in the second half, as the positive European market supported our market, it recovered almost all the lost points and closed positive. Sector-wise, banks and autos supported the market as it raised above 1%, and the main draggers were IT and FMCG stocks. Then for the second straight session, FIIs were net buyers. They net bought shares worth approximately 320 crore rupees, while DIs net sold shares worth approximately 330 crore rupees. After our market hours, on Monday, US market too closed mixed. Mainly supported by energy stocks and dragged by tech stocks. As Jefferies released the report that they were underweight on 16 tech stocks, that list includes Google, Facebook, Tesla and Amazon. So that's what in short what happened on Monday. Now coming to Tuesday, all European market opened positive, but in the end, most of them lost and closed flat or negative. Regarding US market, it opened flat as there were two very important macros were about to release. Then around 10 am Eastern Time, US Bureau of Labor Statistics released the number of available job openings in February. For the first time since July 2021, it comes as below 10 million. This is huge positive. Then at the same time, Census Bureau released month-on-month factory orders for February month and it comes as contracted more than expected. Here it is negative since this directly translates into earnings. Contraction means less revenue. So it's kind of both the macros cancels each other. Then comes the JP Morgan CEO who sends the letter to their shareholders. And in that he issued the warning that banking crisis in America is far from over. I guess most of you guys know him since he headed the bigger bank groups to support the smaller banks. Now, because of that warning from him, carries the huge weightage and puts pressure on all banking stocks. Just for example, First Republic Bank lost over 5%. Meanwhile, lot of global investment firms released the report about the stocks that they downgraded, which made most of the company stocks such as Caterpillar, Boeing and Philips all into significantly negative. Anyway, because of all this negativity, all three major index in US market closed negative. At the end of the day, last night, Dow Jones down by 0.59%, S&P 500 decreased by 0.58% and Nasdaq down by 0.52%. Whereas VIX increased and moved to 19 from near 18.3. Then regarding tech stocks, it closed mixed. About US 10-year Treasury bond yield and dollar index both surprisingly dropped significantly. Dollar index value dropped near 101 mark, and just for info, it is the lowest value since April 2022. Whereas US 10-year Treasury bond yield value dropped near 3.34. Again, this is also a lowest value since September 2022. Then coming to oil, it's very volatile. There is a production cut which is positive, but at the same time, factory orders dropping, less job openings, all signaling the possible recession. However, in the end, on top of 5% increase on Monday, last night it increased another 2%. Regarding numbers, last night Brent crude oil traded near $85 per barrel and WTI crude oil traded near $81 per barrel. Now coming to Indian areas, mostly it was flat as the Indian market was on holiday yesterday. Infosys and ICICI Bank ADR decreased around 0.2 to 0.3%. HDFC Bank ADR increased by 0.3% and Wipro closed absolute flat. Even on Monday too, the ADR's range were roughly the same. So from ADR perspective, it's kind of showing positivity around banks but slight concerns around IT stocks. SGX Nifty at present 3 am Indian Standard Time, it closed at 17,532 mark, which is roughly indicating the 70 points gap up opening in the spot Nifty. Actually, yesterday night, SGX Nifty moved near 17,600 mark, but in the end, as soon as the US market drops, it too dropped. Now coming to our market, first one, Reliance. Last night, Indian government slashed the windfall tax. They completely removed it on crude oil from 3,500 rupees per barrel. And for diesel, they reduced it into half. This with the increase of oil price together, huge positive news for Reliance. Then the second news is regarding banks. Yesterday, first HDFC announced that their loan growth increased near 12%. And honestly, I'm not sure whether it's positive or negative. However, to some extent, I consider this as negative, as the average Indian bank credit growth was around 15% and this is less than that. But again, that for banks, this is just HDFC's data, not HDFC Bank's data. Whereas Federal Bank increased its credit growth to over 17% and IndusInd Bank credit growth rate was 21%. So it's positive for those two stocks. As a summary, US market closed negative. There was a weakness in US tech stocks and so does in our IT stocks. However, already it dropped significantly. And Reliance looks positive, so does the banks. Then regarding the items that we need to look out for today, at 10:30 AM Indian Standard Time, there is a scheduled release of S&P Global Indian Service PMI data. The expected value is 58.3, whereas in the last month, for February, it was 59.4. This data in conjunction with US future market will have an effect on Indian IT stocks. Then in the afternoon, there is a schedule for various composite and service PMI data for March month for various European countries such as Germany, France and Spain, etc. Then in the night, in the aftermarket hours, for US, it's ISM's manufacturing PMI data as it's widely considered as more important than that of S&P Global. So these are the items we need to keep an eye out today for the impact. Now coming to technical, Nifty forms a bearish hammer candle and Bank Nifty forms a bullish hammer candle. Here generally both these candles will be the representation of the respective reversal indication. However, this lower long shadow in both Nifty and Bank Nifty is the indication of support based buying, which is kind of positive. But at present, base level is around 17,200 with a range bound of 17,200 to 17,500. So in order to move upwards, it has to move its base level to 17,500. And thus, it will shift automatically the range bound to 17,500 to 17,800. Thus, we can be bullish only if Nifty crosses 17,500 decisively. In case of Bank Nifty, it has to hold 40,500 today and tomorrow. If it is, then in short term, we can expect more upside in the range of above 41,200. Then coming to moving average, for Nifty, it's neutral, same as last Friday closing, as it trades above the 5, 10 and 20 day. Whereas in case of 50, 100 and 200 day moving averages, it still trades below. However, in case of technical indicator summary, it's improved to buy signal from neutral. Then in case of Bank Nifty, it continues to outperform compared to Nifty, as both moving averages and technical indicator summary improved to strong buy signal from just buy signal on Friday closing. Coming to open interest analysis, based on change in open interest for Nifty, weirdly there was a significant number of call option unwinding took place at 17,000 and 17,350 and lot of new call options added at above 17,400. Then based on overall open interest, after 17,000, 17,200 got the significant put options with less call options. So 17,200 will act as a strong support for this expiry. Then in case of higher side, 17,500 is the immediate strong resistance to break. Regarding Bank Nifty, based on change in open interest, significant call options unwound between 39,500 to 40,500. And huge new put options were added at 40,700, 40,000 and 40,600. By considering the psychological factor, 40,000 is the support to look out for. Then based on overall options open interest, 41,000 is the immediate resistance. Then the next one to break is at 41,500. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and it will also motivate me to do more. Please don't make any investment decision based on this, as I am not a SEBI registered advisor. I am doing it for my and viewers' educational purpose only. Thanks for watching.